So today we saw Tesla stock push aggressively upwards today while simultaneously seeing the S&P 500 have a choppy day downwards. Now this morning before the market opened, I told the Push and Profit private group that we should be monitoring the 10-year treasury, but specifically the rate velocity, which as of right now is elevated into the 4.2 range, and how that puts some pressure on indexes like the S&P 500 and the QQQ. And so when you take a look at the 10-year treasury, we see that it did trickle upwards. Now, a multitude of times on the channel, I've shared that you want to pay attention to the 10-year treasury as it has this inverse relationship with equities. And so when you start seeing the 10-year treasury trickle upwards, that kind of provides a signal for investors that, hey, I'm going to get a better return investing in these government, secured investments versus putting my money into equities, which is much more riskier. And so that's exactly what we saw today. We saw the 10-year treasury rise up today, and we saw the S&P 500 pretty much chop downwards. But that still doesn't explain why we saw a big upward movement for Tesla today. And so the reason why Tesla stock did very well today is that we got data showing that Tesla's China-made EV deliveries rose 9.3% year over year in August. Now, if we take a look from a month-to-month view, we see that it actually rose 30% from the month before in July. Now, me personally, I did not expect this report to come out early, as last year we saw this report come out on September 9th, and so I thought this was going to be coming out next week. However, as someone who not only just trades Tesla in the short term, but also is exposed to Tesla in my long-term portfolio, I'll take great news for Tesla any single day. However, with that said, I want us to be aware of what is taking place tomorrow, as we have some significant events taking place. For example, in yesterday's video, I highlighted how tomorrow we're getting the Fed Beige Book. Now, the Fed Beige Book is a report that is only published 8 times a year by the US Federal Reserve District banks, and it summarizes economic conditions across its 12 districts. And so this is something we absolutely want to pay attention to going forward into tomorrow, but there's something else that I didn't mention in yesterday's video, and that is the fact that the Bank of Canada, which is the central bank for Canada, is announcing their rate decision for tomorrow, September 6th. Now, I know what you guys may be thinking, why are we talking about the central banking decisions in Canada? Don't you normally just talk about what the central bank in the United States does? And that's very true. However, I want to point to the reason why we want to pay attention to what Canada does tomorrow. Now, if we take a look at previous rate decisions for the central bank in Canada, we see that both in March and April they paused. However, back in June and July, they resumed hiking again. And in simple terms, this pretty much spooked the overall market because many market participants believe that the central bank in Canada was pretty much done hiking, but then they resumed hiking, and so that was something that was a little bit concerning. And so we want to pay attention to what they do tomorrow. Are they going to pause, or are they actually going to continue hiking? But with that said, I want us to take a look at Tesla stock from a technical approach and break down my overarching views on Tesla, not only in the short term as a trader, but also in the long term as an investor. But before we hop into my laptop, make sure to check out the link pinned in the comment section below, because there's going to be a link to join my free weekly market pulse insights, where every single week I send out an email talking about what has happened in the overall market and what we have to pay attention to going forward. And again, guys, it's completely free. Alrighty, so we are unofficially in my laptop. Yes, today I said unofficially because we are in my desktop. Now, before we go ahead and break down Tesla stock from a technical approach, I want to share a bit of the conversation that I had in the exclusive Push and Profit private group daily briefing. Now, of course, every time I share a little bit of the conversation, it's always just a snippet, simply because if you want full access to the daily briefings that I give out every single day, as it suggests in the name, you need to check out the links in the description below. But I want to share just a bit of what I told the Push and Profit private group, right? And so what I said yesterday is that I believe we're currently in a brief period of relief, largely because we're likely to see a tapering off in inflation. And so this creates a sense of optimism that the Federal Reserve will ease policies. And I'm talking about the United States Central Bank again, right? Putting our focus on that. And that offers a way out of the current situation. Now, I want to provide some context, and I want you guys to think back to 2007, the Great Financial Crisis. And prior to the crisis, there was a consensus amongst economists and professionals that the economy was going to be stable and that a soft landing was imminent. However, as we know, that wasn't the case, right? And so what often happens in these cycles is a shift in perception. Initially, good news is welcomed, but as concern grows, even good news starts to be viewed as skepticism, while bad news is simply taken at face value as a negative indicator, right? And so at the moment, we're witnessing economic cooldown, which, you guys are seeing the job market, the job openings, all the data we talked about last week. We're seeing things contract, right? And in the short term, this aligns with the Federal Reserve's objective. Why do they want the market to contract? Well, they're obviously they're fighting inflation, so they want the labor market to cool off. And so this cooling is seen as positive because it's steering us towards a more tempered economy, right? The only reason we're saying that it's good that the job data is actually contracting is just because we don't want the Federal Reserve to hike anymore. But in reality, think about it. Is it really good for jobs to contract and for the economy to still grow? No. Right? So it's crucial to remember that this path of contraction in the economy also leads in the direction of a recession. And so the analogy that I shared with the Push and Profit Private Group recently is that we're just a few exits down the same road that we're currently traveling in. Now, also, I was going to say some other stuff, but I think I'll just leave that exclusively for the Push and Profit Private Group, and we'll just focus on the technicals. I was going to go a little bit deeper into some of the data I shared, but let's just keep it as is, right? Let's not make this video any much more longer than it needs to, and let's talk about the technicals. Okay, so, where are we? Well, we're at this area once again where there's a lot of volume relative to price. And when there's a lot of volume relative to price, that means that there's a lot of exchanging between buying and selling. And as I often say on this channel, that could create an area of resistance. It could create supports and consolidation. That's why, when Tesla stock was rising up, I said, hey, we want to watch at this area. Then Tesla got rejected. Did I know Tesla was going to fall down that heavy? No, I didn't know the catalyst news that was going to come out on September 1st. That was just, just out of nowhere. It was just... I can't think of a good analogy for that, but it was a curveball, so to say, right? But it aligns when you're using that, catalyst event in confluence with technical analysis. Well, yeah, we got rejected over here, and we also had some bad news. Okay, well then we had a 3-day weekend, and guess what? Over that 3-day weekend, we had some good news coming from China that sales are looking good. And so that data shows us, okay, well, maybe things, even though Tesla has cut down their prices on some of their models, the idea is that maybe the whole idea of Tesla cutting down their prices is so that it compensates with volume. And so, okay, yeah, cars are cheaper to buy. Yeah, we'll take a hit on the bottom line, but maybe this is going to stir up more demand for individuals to buy more vehicles. And then, of course, that could really just cushion up what's lost from the compression and profit margins. Okay, so we get good data today. And so that pushes us right back. We had a straight upwards day. Let's go ahead and look at this. Let's map this out. While the overall market was choppy, as I showed in the beginning of this video, we saw Tesla, and from the opening to the peak, move up like 6%. Okay, that's good to know, right? And I have so many lines here. I honestly don't like when the charts are flooded. I'll go ahead and talk about those two lines in a moment. But let's go ahead and stay focused, right? So, okay, we're back at this area where there's a lot of volume relative to price. So we want to see what ends up happening tomorrow. So as I shared earlier, we have those two data points, Canada Central Bank, and most likely the good news, and this is really good news, most institutions are anticipating that Canada will pause. And so if Canada pauses, okay, well, that's great news for the overall markets. Okay, so we have one likely catalyst event. Of course, we don't have a crystal ball, and who's to say that Canada won't just actually hike an additional 25 basis points? And so that's why we want to pay attention to it. But the general consensus is that they're going to pause. Okay, so if that's positive news, we could see the overall markets move upwards. It won't get spooked. But then we also have the Fed Beige Book. And so that's something that we want to pay attention to when it comes out, because we want to parse through how bad the economic conditions are. Because we want to see in a unique way, and this is, in an odd way, I want to say, we want to see conditions kind of soften up, but not too bad. Again, the only reason why we want to see conditions soften up is because we just don't want the Feds to continue hiking. We want them to get the data that they need to go ahead and pause and try to do the soft landing that they're and I'm doing the finger quotes right here that they keep mentioning about, right? And so that's what we want. But if we get some bad data, well, that could be a little concerning. If we get, oh man, things are looking really bad in all these different districts, financial conditions are really tight, well, that's not going to be too good. So we have like two different events coming out tomorrow. Actually, through three when you look at the ISM index services coming out as well. But I would say the bigger weighting is on the Canadian Central Bank as well as the Fed's Beige Book. Okay. So we want to pay attention to that. And this is a crucial area because if we do pop above it, if we get really good news from all those data points, well, that puts us at this area where there's very little volume relative to price. And when there's little volume relative to price, it's the inverse of when there's high volume relative to price. Meaning if there's a lot of buying or selling pressure in these areas or pockets with little volume relative to price, that's where you see the order books move up. You see the order books move up when there's very little volume relative to price. And then we see that when we broke below this area of consolidation where there's high volume relative to price and we start seeing selling, well, that's when you see these big candles moving downwards as, again, little volume relative to price, the order books get pushed downwards. And then when the buyers step in, we see it inversely start pushing upwards. So with that said, we're in the middle of the road. We're very data dependent. We get good data, pushes us up to this area where there's little volume relative to price. And if we continue getting buying pressure, all the better. If we fall down below, well, again, that puts us in a scary area over here. So we're in the middle of the road, and that's why we have to stay very data dependent. Now, I want to go ahead and show you guys these lines that I drew here. Now, you guys know that when if you're new to the channel, maybe you may not be familiar with this, but oftentimes I say technical analysis is just one data point, and it's not the strongest out there. It's definitely good to look at, but it's also not something that you use to predict the markets. I think too many individuals get that wrong. They think that when you're drawing these lines on a chart that's going to predict what's happening. No, right? It just measures what previously has happened. That's all it is, right? And so I have this, you guys see this white dotted line over here as an area of support, as we saw that we bounced up at this point in time, and it was a support in the past as well. And then we also see that when Tesla sold off the bad news on September 1st, we had this wick kind of showing that, okay, buyers came in and they stepped in at this area. And so this area is pretty crucial. If we do fall down, we want to see, well, did we fall below it or did we hover above it? Because if we hover above it, well, that's great news. And so maybe we may just consolidate until we get more data coming out. And then, of course, next month we get the more fundamental data with deliveries of Tesla models, right? And so then we'll have a better clue on what's going on from a fundamental perspective, at least an indicator, right? Because we won't have the earnings for third quarters until after that as well. Now, if we do start pushing upwards, we still have to be mindful of this descending trend line. Does it mean that Tesla can't break above it? No, right? These lines don't mean anything, right? Tesla could break above it anytime, right? But we want to see what happens as Tesla would start moving upwards, as would it get rejected? Remember, this has been a descending trend line that has been very strong in Tesla. We see these wicks every single time for a while now, where Tesla goes up, it gets these wicks. Sellers step in. The sellers jumped in over here. Let's go ahead and keep moving, and over here as well. This is I believe let's go ahead and look at it. If I remember, that was the earnings, the last earnings, where it was just a bad news as far as the forward guidance from Elon Musk, as well as the compression and profit margins. And that's when I said, look, more selling is going to happen, and that's exactly what we ended up seeing. Again, I don't have a crystal ball, but I look at multiple different data points, and I use them in confluence to really identify what's currently going on. And so that's why tomorrow is an important day. We're in the middle of the road. And if we get good data, which is likely from the Canadian bank, okay, that's one step. And then if we see just a bit of softening, again, we don't want to see no softening in economic conditions across the 12 central districts for the Federal Reserve, because we want to see a little bit of softening, not because we want that, but just because the Federal Reserve wants that, right? They want to see, okay, maybe we could stop, hiking, and we could just hold on a bit, right? And then the next conversation after they officially stop hiking is, well, when are they going to start cutting rates? And this is why, as a long-term investor, I'm bullish on Tesla. Right now, it may seem that I've been bearish for a while, especially after I made several videos talking about Tesla coming down over here. I'm sure there's someone out there that just thinks I'm a Tesla hater and I'm a Tesla bear, but that's the furthest from the truth. I'm actually very bullish on Tesla. It's just right now, with rates so high, the incentive to go ahead and buy these cars is a little bit more difficult. And so I think that once we get into 2024, when we finally start seeing these rate cuts, that's when things are going to look really good for Tesla. And so that's why, I'm just slowly adding into my long-term position for Tesla. I added in right over here. I believe it's somewhere between over here with this gap. I honestly don't remember, but you could look at several previous videos. I definitely talked about what day I added more shares into Tesla. And I simply just wait for the sell-off, wait for the confirmation of the uptrend, and add in. And that's how I approach my long-term investments for Tesla. And it's very simple. It's not that difficult. If you're investing, you don't care about what happens, especially if you have this idea that Tesla's going to be bullish. I had a different word in mind, but sometimes this conviction. Okay, that's the word. Happens sometimes, right? And so as a long-term investor, yeah, if we fall down and we hold up around over here and start bouncing up, I'll add in. And also, if we actually just continue going up and we break above this descending trend line, I'm definitely adding into my long-term portfolio as well over here, because it's showing signs that we just broke into a new trend. And so that's really all it is for investing. It's not that difficult. Now, trading, it's a little bit more trickier. I don't recommend everyone to trade. I think everyone should invest. But trading is something that's a little bit, it's more difficult, so to say. It's not that it's impossible. You got to have strict rules, and you got to approach it with a very disciplined mindset. But if you're someone who's trading Tesla in the short term as well, there's several opportunities. If we start rallying upwards, well, hey, that's an opportunity to go long. And just like today, I alerted the Push and Profit private group. Let me see what time this was. I think this was, and you guys can't see that screen because I'm not going to share the private chat. 9:35. I said the momentum for Tesla is looking great. So I guess 5 minutes into the open, and I alerted the private Push or Profit private group that while the SPY is slowly moving down, Tesla's having great momentum for a momentum play, and it ended up being a great day off the news for Tesla. And so there's definitely opportunities as a trader as well. You just have to be able to identify what's going on and also stay true to your strategy and have your discipline. But with that said, I'm gonna end this video here, as it doesn't need to be any much more longer. We'll just have to wait to see on the data for tomorrow. And with that said, guys, I'll see you guys on that next video right over here. Take care, guys.